Welcome to today's Explainer. We are stepping onto an absolute battlefield today. It is July 18th, 2026, and the crypto market is locked in this massive, epic tug-of-war. On one side, we've got this powerhouse of institutional buyers just scooping up assets. But on the exact opposite side, significant macroeconomic and geopolitical headwinds striking the market like lightning. It's a literal clash of titans, and we're going to break down exactly what all this means for the charts right now.
All right, let's run through the agenda for today's fight card. 1. The crypto market tug-of-war. 2. Bitcoin's institutional ETF surge. 3. Ethereum awaits the Clarity Act. 4. Geopolitical and AI sector drags. 5. Whale moves and market sentiment. And 6. Critical price levels to watch. Let's get into it.
Section 1. The crypto market tug-of-war, a market divided. So what we're looking at here is a market being pulled in two completely opposite directions. On the offensive, we have these massive risk-on triggers. Think heavy structural crypto demand from ETF inflows and some serious regulatory optimism around the Clarity Act. But pulling hard the other way are the risk-off breaks. These are your dark macroeconomic storms, specifically a brutal tech sell-off in the AI sector and escalating tensions in the Middle East. It is a true test of market strength.
Section 2. Bitcoin's institutional ETF surge. The bulls power up.
Over just the past 7 days, spot Bitcoin ETFs have absorbed a staggering $1.2 billion. Yes, billion with a B. This massive wave of institutional capital is the exact reason Bitcoin was able to temporarily smash right through that stubborn $65,000 resistance level during early Asian trading hours today. I mean, that's its highest level since early June.
And you know what? This isn't just a flash in the pan. We're looking at 4 consecutive sessions of inflows. This sustained capital vector is absolutely crucial because it signals a massive transition. Bitcoin's price isn't just floating on retail hype right now, it is being driven by hard, verifiable institutional data.
To put that into perspective, BlackRock's IBIT is basically leading the charge all by itself. It pulled in an incredible $136 million in a single day. That kind of relentless, heavy-hitting demand is exactly what you need to build a firm structural floor underneath a volatile market.
Now, if you're wondering how we know U.S. institutions are the ones doing the heavy lifting, just look at the Coinbase Premium. It is back. This metric tracks the price difference between Bitcoin on Coinbase Pro versus Binance. So when this premium pops back up into positive territory, it literally proves that U.S. institutions are so hungry for direct Bitcoin exposure that they are aggressively paying a markup for it.
This shift from retail sentiment to structural, verifiable buying changes the entire game. The smart money is stepping in, and they're using this data-driven accumulation to try and flip that $65,000 resistance level into a rock-solid support floor. They want to anchor the asset, even with all the macro volatility swirling around.
Section 3. Ethereum awaits the Clarity Act. Regulatory optimism.
Now moving over to Ethereum, U.S. Representative Brian Steele recently dropped a quote that is injecting some massive energy into the market. He said the Clarity Act could pass the Senate floor as early as next week, setting a new gold standard. That level of regulatory optimism is huge. In fact, it just drove spot Ethereum ETFs to grab their highest weekly inflows since April, pulling in over $105 million.
So why is this a big deal? Well, passing this bill officially classifies ETH as a digital commodity. That kind of regulatory certainty is the ultimate risk-on trigger. Right now, Ethereum is defending its 50-day exponential moving average at $1,812. But if this passage news keeps gaining traction, buyers could easily push targets into the $1,939 to $2,244 range. Honestly, if this bill hits the Senate floor, we could see Ethereum start outperforming Bitcoin in the short term.
Section 4. Geopolitical and AI sector drags. The macro counterattack.
But wait, here come the bears. First up, we've got a brutal tech sell-off. The Chinese startup Moonshot just released its Kimi K3 AI model, which basically forced Wall Street to totally reassess AI equities. Semiconductor giants like AMD and Nvidia, down over 5%. And since crypto has been tracking tech sentiment so closely this week, this localized tech dump is a severe drag. Combine that with escalating tensions in the Middle East, specifically Iran claiming strikes on a U.S. base in Syria and renewing threats to the Strait of Hormuz, and you've got some serious headwinds.
As the old saying goes, geopolitical stress often forces a flight to safety, which can temporarily dampen the appetite for volatile digital assets, and that's exactly what's happening. It's placing a heavy ceiling over the market, totally fighting back against those massive ETF inflows we just talked about.
Section 5.
Whale moves and market sentiment, the aftermath of the clash. Now let's talk about whales, because we are seeing the localized damage a single whale can cause when the market gets choppy like this. A wallet reportedly linked to A16Z just offloaded approximately $6.48 million in hyperliquid, or HYPE, tokens. A dump of that size sends immediate shockwaves through the asset, forcing it to test deep support levels.
So tactically, where does this leave us? Well, HYPE is currently testing its $57.87 Fibonacci retracement zone because of that whale dump. But looking at the broader market, we're seeing this fascinating divergence. The overall fear and greed index is just sitting at a perfectly neutral 49, yet specific assets are totally breaking away from the pack. Ethereum is flashing a greed level of 60, and Chainlink is up at 64. So, high-conviction assets? They're basically just ignoring the broader macro fear right now.
Section 6. Critical price levels to watch. Who wins the day?
All right, grab a pen because these are the crucial numbers you need to track. Step 1, watch how Bitcoin interacts with that $65,000 resistance level. Can it hold? Step 2, watch Ethereum defending its critical 50-day EMA at $1,812. And step 3, track the broader capital rotation. The altcoin season index just rose to 54, which strongly suggests the capital is actively rotating away from Bitcoin and into major altcoins, like ADA, SOL, and XRP, as that regulatory picture gets clearer.
So, this brings us to the million-dollar question for today's highly charged market. Which force is actually going to win out? Will the relentless, verifiable wave of institutional ETF buying build a price floor that simply cannot be broken? Or will the dark clouds of macro headwinds and geopolitical fear force everyone to flee to safety? You've got to keep your eyes locked on the charts, monitor those key levels, and stay tuned to see how this epic battle resolves. Thanks so much for joining me on today's Explainer, and as always, keep learning.